I request CMA Venkateshwaran Ramakrishnan, General Manager of SEBI, to please come onto the dais. I also request the Council Member, CMA Suresh Ratchappa Gunjali, to please come onto the dais. Ladies and gentlemen, amongst us we have CMA Dr. S.K. Gupta, who is the Managing Director of Registered Valuers Organization of ICMAI. He is a PG in Commerce, Gold Medalist, FCS, FCMA, PhD with over 42 years of corporate governance and leadership positions with public and private sector organizations. Dr. Gupta is also serving as the CEO of the ICMAI Social Auditors Organization. He was selected as one of the 9 members by way of open global selection process of the Standards Recognition Board of the International Valuation Standards Council. So thank you so much for coming. May I request CMA Govind Meher of NALCO Limited to welcome CMA Dr. S.K. Gupta, Managing Director of ICMAI RVO. We have with us CMA Venkateshwaran Ramakrishnan. He is presently General Manager in the Inter-Regulatory Interface Group in the Department of Economic and Policy Analysis at SEBI. He earned his master degree in Public Administration with specialization in Economic Policy Management from Columbia University after securing a fellowship. Venkat is an FCMA, Masters in Economics, PG Diploma holder in Security Laws and GST. He served as a member of the Indirect Taxation Committee of ICMAI. He has also been a member of Sustainability Standards Board of ICMAI since 2023 and 24. Sir, it's an honor to have you with us. May I request CMA Lavanya, Chairperson of the Hyderabad chapter, to please welcome CMA Venkateshwaran Ramakrishnan. Can we have a huge round of applause, ladies and gentlemen? Now it's my privilege to introduce you to my senior from Bhubaneswar. He is CMA Ramshankar Mishra. He is an FCMA, holds PG Diploma in Computer Application, Diploma in International Financial Reporting, DISA Forensic Audit, Certificate in SAP FICO and GST. He was previously associated with TS Alloys Limited, currently known as the Tata Steel Mining Limited, and right now he is the Senior Manager Finance of MRPL. He has participated as a resource person in various seminars and workshops of ICMAI and various other organizations. Sir, thank you so much for coming. May I request CMA Sanyasi Rao, ex-chairman of SIRC, to please welcome CMA Ramshankar Mishra. Thank you, Rao sir. Amongst us, we also have CMA Pramod Jain. He is a CMA, CA, CS, CFA, and MBA. He is an independent director, valuation professional, and global business coach. Apart from this, he is also a qualified insolvency professional, authorized valuer under the Income Tax Act, and certified social auditor. He has expertise in strategic financial management for business growth and value creation, in-depth knowledge of LODR, ICDR, PIT, ESOPs, and SAST regulations. He served over 20 years as finance and legal head with leading global companies, including Bharat Forge and Piaggio. At present, he is serving as an independent director of Suratwala Business Group Limited. He has been chairing multiple committees for NSE and BSE listed companies. Sir, thank you so much for coming. May I request CMA Lakshman Rao, chairperson of Vizag chapter, to please welcome CMA Pramod Jain, valuation professional and global business coach. Thank you so much, Lakshman Rao ji. Now, the last speaker, CMA Anuradha Dhavlikar, is a practicing CMA and a registered valuer dealing with securities or financial assets. She holds a diploma in Information Systems Audit, certificate in Social Impact Assessment, certificate in AI and Analytics in Business Valuation, and certificate in ESG Considerations in Valuation. Her clients are from various industries in manufacturing, engineering, hospitals, surgical services, automobiles, auto components, chemicals, software services, KPO, food processing, agricultural producers and exporters, logistics and transport sectors. Prior to CMA practice, she worked with organizations like Godrej, Bharat Forge, etc. Madam, thank you so much for coming and honoring us with your presence. May I request CMA NC Kar, chairperson of the South Odisha chapter, to please welcome CMA Anuradha Dhavlikar. Thank you so much, sir. May I request CMA Suresh Rachappa Gunjali, sir, council member, to give his welcome address.
So dignitaries on the dais and off the dais. So it gives me immense pleasure to welcome you all to the last session of our 3 days, the ICMAC 2025. And I welcome all of you and present here and present virtually also. So today's the session, recipe of financial reporting in DS, BRSR and ESG consists of 3 critical ingredients. That is in DS, the bedrock of standardized financial statements ensuring comparability and compliances, the business responsibility and sustainable reporting for the benefit of the investors who are investing in the business and companies, and ESG reporting. So nowadays, ESG reporting is becoming a buzzword of any corporate world. For India, it is not a new thing. So from olden days, our kings, maybe the business people are doing the charity work. Since from generation, so it is the new word. So now we are accepting this as the ESG, that is economic and social responsibility. So this is a circular economy. If company wants to be profitable, it has to invest in its people, employee, and as well as the consumer who are purchasing consuming their goods and services, to make them healthy, to make them educated, to make them powerful. That means power of purchasing their product and services. I think it has become as a regulatory force actually. The Ind AS has become the regulatory framework under Companies Act. BRS are becoming under regulatory framework under SEBI. Now that ESG, the corporate world, embracing this thing to show to their consumer and worlds they are ready for the serving the people. We all know we are believing in the Vasudhaiva Kutumbakam. That means the whole world is one family. I think today's all speakers are going to touch these things. I heartily welcome all the today's speaker, our own Dr. S.K. Gupta sir, CMA Anuradha Davalkar, CMA Pramod Jain, CMA Ramashankar Misra, and CMA Venkateshwar Ramakrishnan for the today's technical session. And also once again, I welcome all of you for the session. Thank you.
Thank you so much, Gunjali sir. Now I would hand over the stage to CMA Dr. S.K. Gupta sir, who is the chairman of this session.
So distinguished co-panelists with me on the dais, dignitaries of the dais, learned professionals, ladies and gentlemen. A company in China has come out with a very, very novel business idea. The company is selling fresh air. Pavana Bahuchi, hawa bech raha hai. Can you ever think that we would probably need to buy fresh air by paying a certain number of rupees or a dollar or yen? But this is the reality that all of us are facing today. Air is available to all of us free of cost as a gift of nature. But we all know and understand that major part of the globe is today having polluted air. So people are prepared to pay a price for getting a whiff of fresh air. This company is getting fresh air from the Alps mountains, Switzerland, filling it up in the canisters, selling it out in the market, and it's selling like hotcakes in Europe. I'm sure it's going to hit the Indian market also very, very soon. Zara, the leading fashion retailer, a subsidiary company of a Spanish group, is creating its dresses by outsourcing manufacturing to several countries. A report appeared in one of the articles published in Europe which said that a particular dress of Zara was created in China deploying child labor. And that was the reason why the sales of that particular dress plummeted like anything. People are no longer willing to take the products which have been crafted, created by violating the human rights or the labor laws. Changi Airport in Singapore has a carbon monitor installed there, if some of you would have passed through Changi Airport. You can just use some of the tabs which are available. You can say you are flying to India, 2 tickets, this airline, this seat number, and it will give you calculation of what is going to be the carbon emission by way of your taking up this trip, and what is going to be the cost of dealing with that particular carbon emission with a view to creating a better environment for everyone. And they also provide you indication how much is it going to cost to undo the damage that you are going to create by flying from Singapore to India by creating carbon emissions. Gensol, the blue mobility, we all know the crisis that has surfaced recently in the realm of corporate governance. Ladies and gentlemen, these are all examples which are taking us to a situation which we are all aware of, that the world is changing, and the world is changing very, very dramatically and significantly. It's a VUCA world, and here in this world, in 21st century, only those companies can expect to survive and grow and sustain who are high up on the ESG pedestal. It's no longer triple bottom line, people, profit, planet. We are now actually looking at quintuple bottom line, profit, people, planet, but with ethics and equity. That's the added dimension of corporate governance out here. ESG framework is simple enough. Our learned speakers will talk about that in detail. I just want to do a context setting for you all. Environmental aspect is to take care of the impact on environment. Societal aspect is how do you engage with the human beings and the communities with which you work. And the governance part is all about how the company is led and managed. There are lots of examples happening all across the world where the companies are being penalized for not complying with the emission targets or violating certain environmental norms. And there are investors and companies and funds which have committed that they will only invest in companies which are higher up on ESG scale. These are some of the critical examples that we have here. ESG actually helps a business because the research has indicated that companies which do well in terms of ESG parameter have a higher ROE, they have a lower debt cost, they have a lower WACC, and they have huge, better brand valuation as compared to other companies in the marketplace. The Institute of Cost Accountants of India, our mother institution, has taken several initiatives with a view to building up capacity of all CMA members. Institute has released draft of 2 sustainability standards. ISS 1 is sustainability standard on general requirements for sustainability related disclosures. And the second standard is ISS 2, which is sustainability standard on climate related disclosures. These have been developed by the Sustainability Development Board headed by CCM Ashish Thatte sir. We have also in the process of working guidance note or application guidance for these 2 standards, and very soon all of you would receive the draft for your viewing and for your public comments thereon. Another initiative has been taken up by Professional Development Committee of the Institute of Cost Accountants of India, and the institute has actually released a technical guide or a guidance note on environmental costing. BRSR is becoming mandatory for more and more companies because SEBI has already laid out a clear roadmap, but the kind of data that we're getting there as of now is very, very incredible, very, very poor, not reliable. That's because people don't know how to generate the kind of data which is required to be filled up in the BRSR reports. And that's where this guidance note is actually going to help the companies and all the practitioners of ESG framework. The best practices on account of ESG which are arising, being adopted by many of the companies in the marketplace, there has to be a commitment at the board level. Many companies have gone in for having a voluntary ESG committee, not yet mandated by SEBI sir, but many companies have gone in for having a voluntary committee on ESG. Many companies have started the practice of supporting each CAPEX proposal going to the board with the ESG note in addition to the technical and the financial feasibility. Many companies have gone one step forward. All proposals going to the board are also supported by a concept note on ESG impact. Many companies have also started the practice of having one board meeting every year with single agenda. They only want to discuss ESG and nothing else for that matter. That's where the importance of ESG and the Ind AS and also the BRSR in this changing world that we have, and we have learned speakers here to talk about that in detail. That's where I close my presentation. Thank you so much. I would now request Madam CMA Anuradha to kindly talk about the ESG perspective in bit of detail.
Thank you, sir. Well, yeah, sure. I'm feeling like a small fish in a big tank with such dignitaries here to speak. And I'm really humbled that I have been given the chance to speak before many of them. Thank you. And talking about fish, I believe I'm standing between lunch and you. So, fish lovers here, are known for Orissa fish eating, so please bear with me. So today I'm going to talk to you about ESG in CMA practice or in CMA as a service. I will not dwell upon the macro aspects of ESG because it has already been talked about yesterday and there will be more discussions today as well. Well, looks like the presentation is not coming, never mind. So when we talk about ESG and the CMA profession, what we need to understand is this is not just about legal compliances. This is not just about sustainability for the future generations, because when we talk about sustainability, we say that we have to leave behind something for the next generation. ESG is about here and now. Why? We will see. Firstly, let us understand the E, S, and G aspects. By environment, you are breathing the air in here. It is cooled, cleaned for you. You all have clean drinking water in front of you. You have place to sit. You have enough food waiting for you. Yes? Yes, I have sent. About a week back, in fact. Right? So, having all this on this planet Earth, think of it from the India perspective. We are 17% of the world population and we have a landmass of only around 7%. So how much of a strain is that on this tiny piece of land? So each one of us as CMAs, we know the cost and benefit analysis, we know activity-based costing, right? So considering that, if you look at your day-to-day activities in your companies or in your profession, you will realize that every rupee saved in terms of material is actually some mineral being saved somewhere, is actually some carbon footprint being reduced somewhere. So when we talk about environmental reporting, accounting, it has to do with each and every operation of the business. Similarly, when we consider social aspect of the business, today I would like to thank our conveners here for having enough diversity here on the stage. Like in the last session we had Manisha, this session you have me. So we have feminine power, and today's advantage is that I am also partially blind, so you have a disabled person also on this stage. So these are small things in the organization that when you are recruiting, you try and include more women or more other gender persons in your workplace. Does it not involve cost? Don't you have to provide more leaves? Don't you have to provide separate washrooms, separate changing rooms for any other gender? Yes. You have to look at the cost aspect. But how many of us are aware of the benefits of this kind of action? We need to quantify this. We need to report this. It is not just fashionable to have more women in the workplace. It actually has some benefits. And this has been studied in the past at several places. If you look at companies like Chanel, you have a woman CXO there today, right? So considering these things, I would say that social aspect of business is not limited only to the employee welfare or inclusion and diversity at workplaces. It also involves the general public that you deal with, the shareholders as a community, the investors, the management, because they are all people, right? So ESG impact is two-way as far as people are concerned. The companies impact people, the people in turn impact the company. Then the third aspect is governance. What do we mean by governance? Today, I read in the news that Harvard will no longer take foreign students. This is all about governance in the education sector in the US. Let us see how it reflects on us. We as an institute dealing with management, accounting, and costing, I look at it as an opportunity. We have a case here for taking up all those foreign students in our folds. We have the capacity because our courses are available online, our courses are also available offline, and anybody can come from anywhere and learn from us, right? So similarly, governance in companies and businesses is not limited to just following the regulations. It is all about understanding the basics, the ethics that are involved, the reason behind passing those laws, and then calculating the costs and the benefits involved in complying with those laws. It has to go one step beyond. Before the laws are formed, you have to consider what it is that you can do. Let us take the example of 3 companies. When BRSR was first published or notified, for the first year in 21-22, it was voluntary. The companies, the top listed companies could give a voluntary disclosure. So I just looked at Reliance, State Bank of India, and TCS, all 3 of which are in my portfolio of investments. So while going through those BRSR disclosures, I discovered a very close similarity between SBI and Reliance. I framed 45 questions, and I'm glad to inform you I used AI for framing those questions and extracting data out of huge reports, because being blind, it is not possible for me to read so many things. So I found that out of 45 questions on E, S, and G, Reliance and SBI.
Slide. Here also you can see.
Sure, thank
Middle.
you.
Yeah, middle.
Middle one. No?
Yeah.
So this was my original starting point, that we need to report ingredients of ESG in the financial reporting, whereall in the integrated reports, in the management information systems and decision support systems in companies, and in managing stakeholder satisfaction. And what should be the depth and the reach of the reports? The overall aggregates need to be disclosed to shareholders, especially as per the regulations. Then we need focused drill down for decision making. For example, a manager would want to know how much of material saved means how much of electricity saved, how much of carbon footprint saved, right? Then there would be concise summaries for specific purposes. For example, if you're reporting to the Pollution Control Board, then they have specific formats, they have specific drill downs that they will require. Under the Factories Act, you will have very specific questions on human resource management. Now, this is the comparison that I was talking about. So you will see that as far as the environmental reporting is concerned, TCS turned out to be having the most quantitative information in terms of tabular disclosures, whereas SBI and Reliance turned out to be more descriptive. Then if you look at the social aspect,
1 minute.
yeah,
You can stand here and live recording is there.
yeah, sure. This is okay? Okay. It is not loud. It is okay now? Okay, I'm so sorry, I couldn't make out. So if you look at the social aspect of reporting, then all the 3 companies were doing very fine with giving description along with numbers. Okay? And if you look at the governance aspect, you will find that they were mixed responses, like descriptive answers were more in Reliance and SBI, and TCS had more of quantitative information. Now, what could be the reasons behind this? The one that I can see is that TCS has been dealing with international clients, it is listed outside India, and so obviously it has had more exposure to all kinds of regulations in the international arena. So that could be one reason. Second reason could be it is a service industry. They already have detailed records because it is very difficult to put together costs and revenues in a service industry. Whereas in Reliance, it's more of manufacturing, so it is easier to trace the material flow and the revenue flows. Then comes SBI. Again, it is a financial services company, and its purpose of inception itself is very different. It is not exactly high profit oriented, it has more of social responsibility. Excuse me. Then, if we look at ESG reporting for decision-making purposes or MIS, you will see that we need to consider the risks and opportunities that are involved in this. Then if you look at the purpose of supporting the propositions that you're making, if you're a cost accountant and you're putting up a proposal for setting up a new plant somewhere, you are doing the project report, you have to look at how many trees are going to be cut down there. What is the distance between the city and the project that you're going to execute? How much will be the carbon footprint of taking all the material and the people to that site? Then it comes the next step that you have to guide the decision makers in the right direction to achieve the complete roadmap of the company. You have a vision statement, you have a mission statement, but somewhere in the business, you get so busy looking at your bottom lines that you lose track that what is the ultimate goal that we have. So it becomes our business to put these ESG factors together, tie them up with the vision statement, and try and make sense out of whatever you're doing today so that it moves in the right direction. Here I have taken an imaginary example of a textile manufacturer who has to compete in today's world. Environmental risk could be like because of global warming, you might have supply disruptions of cotton. So if your cost of cotton goes up, maybe it is an opportunity you have a mixed fabric. What benefits would that give? It would give you lighter material to transport, you would save on your transport costs, and it would add durability to the material. If you look at the social risks, there could be a risk from the trend of khadi or deshi or something. If you're a mill manufacturer somewhere in Maharashtra or Madhya Pradesh, Odisha would be a good competitor, right? So what exactly do you need to do to mitigate this risk? You need to study your B2B customers, find out who their clientele are, and focus on those clientele of yours who in turn are going to use your material. Then comes the governance impact. If you look at the textile industry or any other industry for that matter, the government of India is going in for Make in India. A lot of duties and anti-dumping duties have been imposed on many, many materials. So if your raw material falls in that category, you have to think about import substitution. Look at it as an opportunity as well. You can use it as a branding tool, a marketing tool, that I am using material sourced from India. Then comes managing stakeholder satisfaction. Let us look at the governance aspect. We talked about vision, mission, ethics, policies. Yeah. Then comes the social aspect. We have two sets of stakeholders, internal and external. And then environmental, as I discussed, air, water, this earth, everything falls into that bucket. So we need to identify costs as well as benefits and put them together in one report. While doing that, you will find that there are very few linkages between the costs and benefits directly, because many a times when the costs are incurred, the benefits are not yet accrued. Especially in the case of social impact assessment, we have seen that it takes years to earn the benefits. And many a times when you are spending actually for something that had happened long back. There could be legal cases against companies which you are now paying for. Then there are hidden as well as explicit costs. Right? So this way we have to classify all the expenses and classify all the benefits, link the two together, and put together a summary for our stakeholders. Now let us talk about how to measure it. I feel that we as cost accountants are uniquely positioned because of our cost audit report. If you compare a financial audit report and a cost audit report, you will find that it is easier to understand a cost audit report. This much was the revenue from this product and this much was the profitability from this product. So same thing happens in the case of ESG reporting. You have to put together the qualitative data as well as the quantitative data and put the money values against it. While doing all this, there's a lot of scope for using AI. There's a lot of scope for using data analytics. Okay? Then valuation of ESG cost and benefits and assets and liabilities. Because when we create an asset, like if you have put up an STP somewhere, that means it is an asset, it is going to earn ESG benefits for you over a long term. Again, there are difficulties involved. Like there will be expenses which you cannot really define as current, nor can you defer them. Your accounting standards will say that you have to expense it out in your profit and loss account today. But as a CMA, you will know that no, the benefits are going to come over a period of time. Same thing happens with assets and liabilities. There is uncertainty involved. So we don't know whether it is really going to be that valuable 10 years down the line or 5 years down the line. As case studies, I had also taken up the share prices of two companies. One is our own HDFC Bank and another is Volkswagen. If you see, HDFC Bank has been involved in very, very few controversies, whereas Volkswagen Group, they had faced major litigation and recall of vehicles. Look at the way the share prices have been affected. These are some of the impacts of not controlling ESG costs or not taking into consideration ESG at the topmost level and drilling down to the last person in the organization. Then social management and reporting are important to companies today because they don't only impact the working or the people working in the organization, they impact the company's image. So I would request you to look into these two companies. One is Godrej Consumer Products and the other is Microsoft. Godrej has been in the business for 125 years. Look at the growth. It is slow but steady. Look at Microsoft India. It is a private, unlisted company in India. They started late. They started in the 90s, but they have grown tenfold. Why? Because the social impact is very high. How many of us use Mac? Very few. Microsoft has entered the market early, captured the people's minds, and grown tenfold. Then comes the environmental management and reporting. Again, here I will ask you to look up two companies, ITC and Sterilite. What is ITC famous for? Tobacco and tobacco products. But they are a conglomerate. They do manufacture several other things. Look at the way they report. If you read their annual report and read their website on About Us, it will first talk about FMCG, it will talk about hotels, paperboards, and tobacco products will come somewhere last in the list. Now, same way, look at Sterilite. We all know that Tuticorin plant of Sterilite was shut down because of environmental issues. But the cases went on for years together. Why? Because it is an important industry to the country. 36% of copper demand was supplied by Sterilite. What the company failed to do was report its environmental problems from time to time. Now, why do we need to measure ESG in terms of money? Everybody understands money. But what is the problem involved? Not everything can be measured in money. If today I say that the organizers switch off all the lights and the AC, will you be able to sit in this room, in this auditorium for half an hour? No. So I think I have run out of time. So I will call it a day. I will leave you with the thought that even the laziest person who believes that someone next door should be doing all the ESG can really save the world. You please go to this website and check it out. And in case any one of you needs anything to do with ESG or with any other aspect of sustainability, please feel free to get in touch with me. I do only pro bono consulting, and I try and help whoever is starting a new business as a CMA as much as my little hands can give. Thank you.
Good afternoon, everyone. Good afternoon, everyone. Can't hear you. Good afternoon, everyone. Chairman of the session, Dr. Gupta ji, my fellow panelists, fellow professionals, CMAs, ladies and gentlemen. I have a time of 11 minutes. So before I start, today we are celebrating 62nd NCMAC. In last 6 decades, lot of efforts have gone by a lot of people at this central level, at the regional council level, and at the chapters level. So I think it's a time to give them a huge round of applause for all the leadership which have taken us to this place. Now, I have a time of 11 minutes. So in these 11 minutes, what I intend to do is, number one, give you 3 mantras as to how the Indian accounting standards, Ind AS, can be used by every one of us in a very simple and easy manner. And number two, I would also like to connect the dots, because all of us have this, we keep on hearing sustainable development goals, then ESG, then national guidelines on responsible business conduct, and then BRSR, and then the purpose of a business. Now, how all these are connected? And let me tell you, they are connected in a very, very systematic manner, and which is also very easy to comprehend. So let me start to understand this entire thing. Let us begin with the first mantra. And what the first mantra is? The first mantra is to know what is purpose of a business. So today, if the whole world is talking about good corporate governance, ESG, BRSR, and all that, as to why are they talking about? And for that, we need to understand as to what is the purpose of a business. Now, if I ask you this question, I'm sure most of us would say that the purpose of a business is to make profit. And by the way, please listen to me very attentively. And why very attentively? Because this undo command, this undo command that we have, this undo command is only in computer. लाइफ में कोई undo command नहीं है. क्या मतलब है कहने का मतलब ये है कि अगर कोई अपॉर्चुनिटी मिस हो गई तो फिर आप भगवान के सामने जाके कितनी भी प्रार्थना करिए, वो अपॉर्चुनिटी वापस आने वाली नहीं है. जस्ट टू गिव यू ए स्मॉल एनेक्डोट, देयर वाज ए स्मॉल बॉय, एक छोटा सा बच्चा था, और वो भगवान की तस्वीर के सामने खड़े होकर प्रार्थना कर रहा है, हे भगवान, दुबई को हिंदुस्तान की राजधानी बना दो, हे भगवान, दुबई को हिंदुस्तान की राजधानी बना दो, हे भगवान, दुबई को हिंदुस्तान की राजधानी बना दो. तो जब उस बच्चे के शब्द मेरे कानों में पड़े तो मुझसे रहा नहीं गया, और मैं उसके पास गया. मैंने कहा, बोले बेटा क्या बोल रहे हो, दुबई को हिंदुस्तान की राजधानी बना दो. अगर दुबई हिंदुस्तान की राजधानी बन भी गई तो तुमको क्या मिलेगा? तो अंकल, बेटा बोलता है, अंकल ज़रूर मिलेगा. मैंने कहा क्या मिलेगा? बोलता है, अंकल बात क्या है कि कल मेरा एग्ज़ाम था, एग्ज़ाम में एक क्वेश्चन था कि हिंदुस्तान की राजधानी क्या है, और मैं दुबई लिख के आया हूँ. तो रिमेंबर, फिर बाद में कितनी भी प्रार्थना करो, दुबई हिंदुस्तान की राजधानी बनने वाली नहीं है. हालांकि बन जाए तो अच्छा है, घड़ी घड़ी वीज़ा निकालने का चक्कर ख़त्म होगा, और वैसे भी मोदी जी हैं तो कुछ भी हो सकता है. So the first thing that we need to understand this entire framework as to what is the purpose of a business. Now typically if we ask this question to anyone, he would say that the purpose of a business is to make profit. And let me tell you, if someone is saying that the purpose of a business is to make profit, he is completely wrong. He is completely wrong. And why do I say this? I say this because if the purpose of a business was to make profit, we will not hear of a company called Google. Why? Larry Page, Sergey Brin, the founders of Google started making profit within first few years of their operations. And they would have said, purpose of a business is to make profit, we have made profit, purpose is achieved, let us close the business. If the purpose of a business was to make profit, we would not hear of a group called Tatas. Why? Jamshedji Tata, the founder of Tata Group, made huge profit from his exports business and from his textile business. He would have said the same thing, that the purpose of a business is to make profit. I have earned enough profit. My purpose is achieved. Let us close the business. So therefore, please remember, why do I say that the purpose of a business is not to make profit? And that is because making profit in a business is non-negotiable. Making profit in a business is not a matter of choice. Making profit in a business is mandatory. Making profit in a business is compulsory. Meaning what? Meaning if you are in a business, you better make profit. If you are in a business, you better make profit. And if you are in business and you can't make profit, the least that you can do is to hand that business over to someone. And today, remember, we have a law in this country, we all know, and that is Insolvency and Bankruptcy Code. So what this IBC is, it is nothing but in case of a business is not earning profit, that business has to give unto somebody else. So then what is the purpose of a business? And the purpose of a business is to create value. And if I can simplify it, I would say purpose of a business is to create value by making profit, or purpose of a business is to make profit by creating value. Now a question must be coming in the minds of every one of you. What is the meaning of value creation? What is the meaning of value creation? And let me tell you, friends, the simplest definition that anyone can give as to what is value creation is nothing but to make this world a better place to live today than what it was yesterday. And that is what value creation is all about. Now, this same thought went to the UN, and UN ने सोचा कि वाकई में पूरी दुनिया को बेहतर जगह बनाने की ज़रूरत है, बेहतर जो कि कल से भी ज़्यादा अच्छी है. So what they thought? They thought of 17 items. And those 17 items are known as Sustainable Development Goals. And by the way, if you want to know what these 17 Sustainable Development Goals are, you do not have to go anywhere. Just pick up a pen and paper and start writing down कि अगर ये दुनिया को बेहतर बनाना है तो क्या-क्या चीज़ों की ज़रूरत है. And if you keep on writing down, and you will come to 17, 18, 20 items, and if you would compare this list of yours with these 17 Sustainable Development Goals, you would be surprised as to what your list contains is the same thing what these 17 Sustainable Development Goals are. Now, these 17 Sustainable Development Goals are then broken into 169 sub-goals. Now, what is ESG? ESG is nothing but summarization of these 169 sub-goals which form part of 17 Sustainable Development Goals. And why do you summarize? You summarize because ultimately the objective is not just to list them, the objective is to communicate them. So then you have ESG. Under ESG, all these items come, and that is why it is possible for the corporates to implement them. Now, it is not only a question of communication, what is also important is implementation. So for the purpose of implementation, how do you implement? For the purpose of implementation, the government of India came out with something which is known as National Guidelines on Responsible Business Conduct. So what these 9 principles of National Guidelines on Responsible Business Conduct. So if you look at that, there are 9 items. Under all these 9 items, you would see all these 169 sub-goals of the SDG are mapped with these 9 principles of responsible business conduct. And now these 9 principles of responsible business conduct are again mapped into the BRSR report. So if you would look at the BRSR report, what the BRSR report is, BRSR report comprises of 9 different headings, and all these 9 different headings are linked with the 9 principles of responsible business conduct. So this is the entire linkage. Now the question is, so this is the linkage. So what you have, purpose of a business, which is value creation, which is then 17 Sustainable Development Goals, 17 Sustainable Development Goals broken into 169 sub-goals, and summarizing them is the ESG. ESG को implement करने के लिए there are 9 principles of responsible business conduct, and these 9 principles of responsible business conduct are then mapped into BRSR. Now the question is, why Ind AS? Now it was okay until the time there was no globalization. So the accounting standards that we had in this country, 27 of them, which we refer as Indian GAAP, was good enough for the Indian purposes. Now that the world started globalizing, obviously the need was felt that the accounting standards need to evolve in a way so that they serve the global purpose. Because today what we have got cross-border transactions, cross-border investment and everything. So somebody making investment in China, Europe, Russia, Asia and everywhere, how do you really find out as to the company where you have invested your money, how that company is doing, unless you understand the accounting methodology of that country? And that is how the global financial language emerged, and that is your IFRS. So IFRS is started, and what we have in our country, we call it as Ind AS. And what is Ind AS? Ind AS is nothing but adapted, not adopted, adapted version of the IFRS that we have. So Indian GAAP, 27 accounting standards. Ind AS, there are 39 accounting standards all put together. What is the difference between the two? Now I can tell you the difference between the two is, one is of the number, and second is of the size, and third is of the focus. So the number, Indian GAAP 27, Ind AS 39. Size, Indian GAPs are relatively smaller in size, in content. Ind ASs are much more vast and voluminous. And the focus in the Ind AS, in the Indian accounting standards, is on the historical accounting. And in case of the Ind AS, the focus is on fair value accounting. So the question that may come to mind of every one of you is to why fair value why fair value accounting? And the reason behind, of course, is very simple, because if the financial statements have to reflect, the true fair position, then obviously the accounting has to be done on the fair value basis. Because if I'm doing the balance sheet today, then my balance sheet has to reflect the value of the liabilities and the assets at the stand today and not in the past. And that is why the fair value accounting. So that is the second difference. Why I am discussing this with you, because if you and I have to understand Ind AS, remember, it's not very difficult. What you and I need to remember is that Ind AS the focus is on fair value. So whether it is Ind AS 16 on property, plant and equipment, or Ind AS 36, which is on the impairment of the assets, or Ind AS 107, which is on financial instruments, or Ind AS 132, which is on presentation, or Ind AS 109, which is on disclosures. All these, or Ind AS 102, which is on share-based payments, or Ind AS 103, which is on business combinations. So all these accounting standards, you would see, they use the fair value. And that is all what we need to remember. So the second mantra is, remember, the Indian accounting standards is fair value based accounting. And that means every transaction that we record in our books got to be linked with the fair value and not the historical value. So this is the second mantra. And the third mantra is just keep on working them. So it is quite possible when we start looking at the Ind ASs, start reading them, they are complex in drafting. But if you keep on reading them, I'm sure it will be very easy for every one of us. And finally, friends, why Ind AS? Because ultimately it is proved all over the globe that the valuations of the company are linked with not only the performance, not only the financial parameters, but also the non-financial parameters. And one of the very significant non-financial parameter with which the valuations of a business are linked, and that is your reporting, and that is your transparent reporting, timely reporting, relevant reporting. So if you follow the Ind AS and the proper accounting, then the valuations of the business also go up. So with these three mantras, I would put a pause. Thank you so much for giving me time to the Institute. Thank you so much. Thank you.
Thank you so much, Mr. Jain. I would now request CMA Ramakrishna sir from SEBI to kindly share his perspectives on BLSR. And I would request CMA Ram Shankar Mishra, Senior Manager Finance MRPL, to share his perspectives on accounting standards and its relationship with ESG and governance, please.
Respected dignitaries on the dais and of the dais, and with the permission of Lord Jagannatha, we'll start our session And before starting, I will take you one word where I am working currently. One mantra is there, छुएंगे हम आसमान. And today's what topic for this 60-second NCMS is that corporate excellence and CMA vision. So what I can say, all CMA, those who are either practicing or serving in the nation, they have to only have one mantra that छुए में आसमान. तभी जाके हम लोग के प्रोफेशन में थोड़ा कुछ ग्रोथ ला सकते हैं या कंपटीशन ला सकते हैं या परफेक्शन ला सकते हैं. So considering this one, today I am here to talk a very serious issue and I need your attention. That today I will not tell what is Ind AS, what is IFRS, but I will take you through what a cost accountant should know when he is doing a cost audit or preparing financial statement in any organization, how he should take input from either BRSR or IFRS or Ind AS or ESG so that value addition or potential can be brought in the reporting for the cost accountants in any organization, whether they are in practice or in service. So guys, you can see here that the G20 submission, that what mantra we have told, that Vasudevaka Kutumbakam. So just like the world is a mini world and everything is common, considering the same funda, now we have taken and adopted or converged the international practices in India, and when we adopted the IFRS in India, that conversion process is known as the converged IFRS into Ind AS, and I will take you through one or two slides how that conversion has done. If you see, the modern economies rely on cross-border transaction. It is not an open market. Now it is totally open market. Anybody can sell his product or services any part of the world, no restrictions, and each entity for their requirement, they want a free cash flow from the global, and all investors, those who are potential or present, they want to have a investment opportunity throughout the globe. They don't want to restrict their investment opportunity any part of the world. They want to have everywhere. But thing is that if somebody will come to India or one investor who will go to abroad, if he want to do investment, first of all, he'll test check the financial health of the organization where they want to do investment. So when those countries are being following only national accounting standards, then to read and understand and invest in those countries or prospective investor, those who want to come to do business in India, it is very difficult for them, and it is always carry a cost, complexity and risk while taking a decision for their investment. Considering all those things, a vision came to India through our erstwhile finance minister Arun Jaitley that why not to converge the Indian accounting standard with the international practices. Considering that one, we converged the IFRS, that is International Financial Reporting Standard in India, and we have converged in the name of Indian Accounting Standard that we are in short, we are telling at Ind AS. So IFRS addresses this challenge by providing one common reporting language which is high quality, internationally recognized, and its purpose is that to solve all the investors' decision when they are taking any investment purpose or they want to compile any financial statement, any part or any corner of the world. So if you see what is the essence of IFRS, why we brought it? Because it's a standardized practice throughout globe. Whatever the best practices are available any corner of the world, that has brought in that practices. So when it has conglomerated, so it has refined into a best practices in the world. When one company or entity who will adopt or report their financials under IFRS, it will give more transparency, strengthen accountability, boost economic efficiency, and it will give opportunity for more capital investment and lowering the cost of capital, because more FIA will come to India, then competition of investment will more, your cost of capital will be also reduced. And apart from that, there will be a uniform accounting practices throughout the globe. So any party or any entity or any company go any part of the world, it will easy to understand those things, and there is no interpretation or no conversion is required. And that is called your brand value. When one company is following IFRS, then any investor, any part of the world is very much interested to come and invest if they can easily understand those financial statements. So ultimately, what is the crux of the story? It gives clarity, reliability, relevance, and comparatively while you are analyzing any financial statement. So now time is that when a transition has made, the transition is that from accounting standard to reporting standard. The Erstwhile reporting was International Accounting Standard that has changed to IEFRS, that is International Financial Reporting Standard. So nowadays, we cannot restrict ourselves only up to accounting. Now time has come up that we have to come up and we have to change our accounting to reporting, because reporting gives a layman more understanding than figures. So this is the chart I have taken from the IFRS Foundation. Now this green portion is that the countries, around 169 jurisdictions are there. Those who are following IFRS global, either they have adopted like Japan or your Bangladesh, or they have converged like India into IFRS. So this is one more thing, that IFRS Foundation has two boards. One is your International Accounting Standard Board and International Sustainability Standard Board. So as sir told, International Accounting Standard Board, they are the body who are responsible to create IFRS standards. And sustainability is the body who is responsible for creating the sustainability standard. So as of now, IFRS has developed 39 standards in IFRS and 2 sustainability standards are there. So just for your information, I am taking you through. So what is the need of Indian convergence to IFRS? First thing is that when the global economy has booming up and e-commerce is growing, so there is a imperative need of single global accounting reporting in India. Because India is a growing country, we have many investors in India, and many Indian companies are also going to abroad for their investment. And second thing, that to fulfill your capital requirement, you need to get your equities listed in other countries. So that also our Indian companies are doing. Considering all those things, this IFRS requirement has come. Third thing is that nowadays business is getting complex day by day. So when accounting, which is an international practice, will come, then more clarity or understandability will come. So Indian entity thought if we will bring that one, so considering the complexity, more understandable account can be given to the reader of the financial statement. Fourth one is that underpin the confidence of the investor. Considering many scandals or scams in India, the regulators have a requirement how to bring something that which will win the investor's trust. And that was the International Financial Reporting Standard. Then one more crux of the International Financial Standard is that it is a principle-based account. It is not a rule-based. It is not a rigid. It is flexible. It is judgmental. You can take many scenarios where you can apply the IFRS as per your judgment or flexibility. So there is no rigid practices there. And yes, when we implemented IFRS in India, we have done some carve-ins and carve-outs. And as far as possible, we tried to match the corresponding IAS and IFRS with the relevant standards. But wherever required, which is very much required, departures have been made. So this is called your carve-in and carve-out. With this process, the International Financial Reporting Standard has converged in India, and that is called Ind AS. So this graph, I need your attention. If you see this graph, the generally accepted accounting principle, everybody knows, it's a very large connotation. So if you see national gap, our AS, erstwhile AS was your national gap, that has now reincarnated into Ind AS. And this Ind AS has two components. It has not entirely IFRS. Certain IAS standards are still there. Those IAS standards are from 1970 through 2001. They have come to the Ind AS. Similarly, latest, whatever IFRS standards are there also, they have converged in India. So now, what is the beauty of IFRS? What are the highlights? Your valuation, like sir told, now options of valuation into fair valuation is there. Now this era is not on historical cost basis. It is on fair value basis. So we cannot restrict ourselves that we will report only on cost, only on historical cost. No. Now we have to come up with the fair value concept, and we have to do fair valuation like our financial instrument Ind AS 109 or PP, property plant equipment Ind AS 16. These are giving option to the user that if you want, you can convert your financials into fair valuation so that it will give you the real business entity. Be a real business sense that what is the real value of the business. So those options are there in valuation which are missing in our AS. Time value of money is the fundamental principle of IFRS. So wherever anything is there, means suppose you have given any investment or you have taken investment, you have to take the time value into consideration so that the real meaning of the financial statement will spell out. And substance over form, this is one of the major highlights, which is talking about the economic reality of the transaction, not just their legal form. Means, suppose I have taken one piece of land, 500 crore rupees, I have not got the lease deed for that land, I have constructed plant and machinery over that. Somebody may say, there is no title deed for the land, even though you have erected the plant and machinery and taken control, but this is not your land because title deed is not there. But IFRS is telling no. You have to think about economic substance is what. Now that land is under control. So bring it in your PPE. So is your lease land. Bring it under ROU. Don't show as a advance for capital. because this is called your substance over form. So these realities or the substances or the meaningful business has come under IFRS, which was not there under AS. Disclosure. It is one more essential part of IFRS. Now, if you see the financial statements, more disclosures are there and less financials are there. Why? Because one reader of the financial statement cannot read and understand the financial figures. You have to give adequate disclosures so that they can go and understand the business nitty-gritty. Materiality is also one of the essential element who's talking about that omitting, misstating or obscuring is just like a material decision which the investors is supposed to be taken, and by doing that they are not able to take. So they are telling ki many assumptions or adjustment you can based on or you can take on materiality ground. That for each small decision you no need to change your accounts. Then your approach. As I already told, it is a principal approach. So flexibility and allow for judgment is there. So it is not like rigid. So only a 2-3 minutes I'll take. Beauty of the IFRS is that it talks about explicit and unreserved statement. When one entity is adopting or applying all indices, then only they can give a disclosure that they have followed all the standards, and it is a mandatory requirement that all entity, those who are following index, they have to give one explicit and unreserved statement that they have followed all the standards. There one more concept has come, third year balance sheet. We have learned till now 2-year P&L and 2-year balance sheet. But IFRS is tell, if any mistake you are doing or any error is there or change in accounting policy is there is no concept of 2-year balance sheet. Draw a 3rd-year balance sheet, bring all such error adjustment in the opening balance in the preceding financial year. Then other comprehensive income is one more beauty, which is talk about all unrealized gains and losses. Like earlier we are reading only P&L. So now they have brought one more concept, other comprehensive income. So it is one statement, both will be there. P&L plus OCI will be TCI. So this is also one of the beauty of IFRS. Then definition of fair value and NRV, where fair value is a market approach, NRV is entity approach. This deliberation also given under IFRS or Indes, which were not present in AS. Then selection of material accounting policy. Whenever you are doing any accounting policy, you have to give a material accounting policy disclosure. So while doing your cost audit, we can also think about adequate disclosure in similar line. Then accounting change in policies. Standard is telling when you are changing accounting policy, you have to do retrospective application, and in case of any error, you have to do retrospective restatement. So these two options are there in IFRS. Then prior period item, there is nothing called prior period item. If any prior period item is there, it will be tantamount as an error done by the entity, and you have to restate your financials. Then deferred tax. Now when you are creating deferred tax, it is a balance sheet approach, whereas earlier it was an income approach. Then recognition of OCI and other things are also there. These are the all things which was not there in the AS, and that brought out in the IFRS to bring more reality in the financial reporting. So now question, my last slide, with this I will complete. Now this message is to all practitioners that through this Indes or IFRS, how to create vision to value. When we are doing cost audit or we are preparing financial statement, what sort of things we'll do so that in our report we can bring value addition. So Indes 16 talk about requirement of reassessment of useful life and residual value of asset every year mandatorily. My question to all practitioners here, when one company is restating or changing useful life or residual value for the property, plant, equipment for a particular reporting period, that depreciation charge will either come up or come down. So in those situations, whether you are checking your cost audit report while you are preparing, whether you are evaluating all these points, if you are evaluating whether you are giving the disclosure, so that the reader of the cost audit statement also come to understand that this impact is there. Similarly, Indes 38 talks about if any development charge, which is supposed to be capitalized, but you have debited to P&L, that you cannot bring back to capital asset. So when you are doing cost audit, whether you are disallowing those expenditure as a non-cost item, that also during cost audit you have to think about it. That whether, so to know those things, you need to know the nitty-gritty of Indes accounting financials. Third thing I will tell, if any government grant is there and you have done fair valuation, then that notional portion of the part you have debiting your asset and you creating a deferred tax liability. So while doing the cost audit, whether all those things you are considering as a part of cost, that also you have to evaluate. So many aspects are there, like Indes 1 talks about not only presentation and recognition or measurement, it talks about disclosure. So whether you have thought of that when you are doing cost audit, you have you are telling your client to bring more disclosure to the cost audit? If not, then it is my request that just like international practices, now we are giving more disclosure. In my view, it is my suggestion that more disclosure should come to the cost audit report so that the reader of the cost audit report will come to know what is the reality beyond figures. Will not rely on figures, will rely on the disclosures. How many disclosures you can give so that reader can easily read and can conclude the cost audit report. So let us not make cost audit only inside the company. It may help the management in decision making. So these disclosures can assist the management to read, understand the business, and then enable them to take many decisions on this way. So these are the things that you should think about it, and as time permits is not there, so I will not take you through many things. Only one last thing I will tell, that your regulation SEBI LODR 2015 regulation 34 subsection 2F talks about BRSR reporter for 100,000 listed entities. So I will not take what is the nitty-gritty, what is the BRSR and other thing, because sir has already spoken. Only one thing I will tell and close this presentation is with the BRSR core framework. All cost auditors should go through this audit report and they should evaluate the 9 ingredients of BRSR core. What are those? Greenhouse gas footprint, water footprint, energy and wastages. These are the things. When a cost auditor will go through this, he can really get the insight of the company, how the company is managing its business. Because here, when you are taking your assurance, you cannot hide now. And this is the area where we can really add value in the cost audit to the entities. How much is the green gas footprint is there, how the water conservation methodologies are there, energy, how they are saving, what is the wastage minimization is there. I can tell you, these are the things where you can take input, like Indes I told, like here also BRSR or ESG is there. You can take input and definitely you can enhance your value addition in the cost audit report, and you can take input from this and you can give a management a suggestion or direction how to do your business. So with this, I will conclude my session, and thank you very much for your patience learning. Thank you very much.
Thank you so much. Now I would request CMA Ramakrishna sir to kindly make his presentation on BRSR and its evolution as well as the current status. Thank you.
Respected present as well as the past leadership of the Institute of Cost Accountants of India, my dear fellow members of the Institute of Cost Accountants of India, other dignitaries, and my dear students. So, the time that I am having for this session, I will devote to give you a perspective on what is the global as well as the domestic thought process as regards putting a framework for sustainability related disclosures. We have heard about some of the provisions that are already there in the form of BRSR and some case studies of the BRSR reports also from the learned speakers who have spoken ahead of me. So, any securities market regulator, whether it is India, Asia Pacific region or anywhere in the globe, they have actually mainly 3 roles. First and foremost of it is the protection of the interest of the investors, and second and third are actually the development and regulation of the securities market. Now, in the context of protection of the interest of the investors, what securities market regulator normally do is that they mandate disclosures. So there is a famous dictum that in the securities market, sunlight is the best disinfectant. You all know that, like very simple example I can give you, if we expose ourselves to sunlight in the morning or in the evening, our body gains vitamin D. So similarly, in the case of securities market, that sunlight means that you are exposing the relevant information or material information to the attention of the investors or the stakeholders rather, because when we are coming to sustainability disclosures, it has to be a broader spectrum called stakeholders, so that they can arrive at decisions after assessing all the risk and opportunities that are there in that. Now, it is in this context that we should actually look into principle number 16 of the IOSCO standards and principles for securities regulation. So IOSCO, just like the BIS, the Bank for International Settlements for the central banks, IOSCO is the global umbrella body for all the securities market regulators, and that's why SEBI also is a member of the IOSCO. IPSCA is there, that is also a member of IOSCO. So IOSCO Principle 16, it says that there shall be full, accurate and timely disclosure of financial results, risk and other information which is material to investors' decisions. So in addition to financial results, what has to be provided to the investors are information about the risk and other information that are relevant for the investment decision. Now, all the climate-related disclosures, they are basically, as you must have understood by now, it's about the risk as well as the opportunities that emanate out of the climate change. Now, this is the Principle 16 of the IOSCO Objectives and Principles of Securities Regulation. And as I told you, since India is also a member of the IOSCO, so we also have to ensure that our regulatory regime is at least compatible to this global standard. We can actually excel beyond that. There is no question of anybody asking why for that one. But we cannot be seen as lagging behind. Now, it is in this context that we have to look at some of the other global bodies and their work. For example, we have all heard multiple times about the COP or the Conference of the Parties, especially the Glasgow Summit. But more than that one, there are actually from the top itself, from the top by that I mean the political leadership itself that has got involved in this exercise, and that comes in the form of the G20, Financial Stability Board, where the finance minister, the securities market regulator and the banking sector regulator of all the G20 member nations are present. And also, as I told you, IOSCO, which serves as the lead knowledge partner as regards securities market for these initiatives. Now, these three entities rather, they have taken some steps. For example, the G20 Sustainable Finance Working Group, they have actually undertaken work streams, and that has also been contributed to by the Network for Greening the Financial System and the International Platform on Sustainable Finance. Now, COP26 or the UN Climate Summit held in November 2021, it gave a big boost to sustainability-related issuer disclosures by promoting the implementation of a global corporate sustainability reporting architecture. Now, I emphasized November 2021 because, this was the time when almost everybody, and SEBI also had stipulated that it's no longer business responsibility reporting, it has to be business responsibility and sustainability reporting in the form of specifying the BRSR format. Now, the G7 finance ministers and central bank governors in their communique of June 5, 2021 emphasized the need for the investors to have high quality, comparable and reliable information on climate risk. Now, these all things actually resulted in, as we have already heard, that the IFRS Foundation setting up or establishing the International Sustainability Standards Board, and the ISSB in turn came out with the two sustainability standards, S1 and S2, and that was in June 2023. And just deviating from my topic, but what is related to in the context of what the institute has done is that, so the global prescription from all these bodies was that there should be an international baseline disclosure requirements. Beyond that, every jurisdiction is free to adopt its own disclosures as regards sustainability disclosures are concerned. Now, it is in this context that the Institute of Cost and Management Accountants of India, they also have prepared the ISS 1 and ISS 2 and have already, exposed, brought in the public website, in the website of the institute, the exposure draft for public comments. So this is what actually, the thing is that a global baseline disclosure framework is put in by the ISSB. Every country can actually modify the sustainability disclosure requirements based on its own, country-specific factors. So it could be the availability of data, it could be the preparedness of the listed entities, because what we are talking about from the BRSR is the issuer-related disclosures. Now, two more things have happened subsequent to ISSB. I just go back to the ISSB thing. So one is that the International Auditing and Assurance Standards Board, it has published the International Standard on Sustainability Assurance. So ISSA 5000 has also been put in place. The International Ethics Standards Board for Accountants published the International Standards for Sustainability Assurance. So this happened very recently in January 2025. Now, it is in this background that we have all, heard about or experienced the BRSR format that SEBI has brought in. But just to connect with some of the events that have been mentioned here. So, at the turn of the millennium, the UN had the Millennium Development Goals, which actually concluded in 2015, but the progress was not so good. And because of that, the Millennium Development Goals gave way to what we have heard as the Sustainable Development Goals. Now, in the case of BRSR, before Sustainable Development Goals were there, it was the business responsibility reporting. So subsequent to UN coming out with the Sustainable Development Goals, Ministry of Corporate Affairs come out with the national guidelines on responsible business conduct and also set up a committee to ensure that the listed as well as the unlisted entities, they are doing their sustainability disclosures, and for that purpose they wanted to prescribe a format. So that is again where I would like to inform you about the role that our institute has played there. In the committee that was set up by MCA for the purpose of framing the draft BRSR format, all the three institutes, including the Institute of Cost and Management Accountants of India, they were represented along with SEBI. So what you are today hearing about BRSR, the report of the committee is available in the public domain. If you just open it, you can find and you can take comfort of the role that the institute has played in prescribing the format. Now, that draft format was released by the MCA. SEBI subsequently took the report for public consultation on its website, and subsequent to receiving the public consultation comments, we prescribed the BRSR for the listed companies. As has been mentioned, it was first year, it was on a voluntary basis. That was FY 21-22 for the top 1,000 companies. And it became mandatory from 22-23 financial year onwards. Now, here also, why 1,000? I have two answers. Why 1,000 companies or listed entities? The two answers are, as I told you, BRSR took the place of BRR, and BRR was applicable to 1,000 listed entities. Second, as you know, the share of the top 1,000 companies in terms of market capitalization is substantial. So the coverage of the necessity for filing the BRSR report, it almost covers the entire market capitalization. And for the paucity of time, I will not get into the contents, but there are three sections. General disclosures are there, management and process disclosures are there, but the main one, what we have heard in these case studies and all, are the part 3 or the section C, which are principle-wise performance disclosures. So it is against the 9 principles of the National Guidelines on Responsible Business Conduct. And we have also identified within the BRSR, something called BRSR Core, which actually covers the key performance indicators associated with all the three factors: environment, society, and governance. Another thing that I would like to mention is that we have come out with, till December, it was reasonable assurance. But to ensure that there is ease of doing business, to bring down the cost of compliance, and also to make it profession agnostic. So that is, again, I am telling all the members, it's not just the domain of any single profession, it's open to all. So to make it profession agnostic, now it is assessment or assurance. So there is an option there. Company, if it has, request or demand from its stakeholders, it can go for assurance, but assessment is also acceptable and it will be considered as proper filing. So that is again another thing that I would like to highlight for the attention of the members. And another thing, why 1,000? Now, just, I will take for instance two sectors, automobiles. Except the engine, almost every component might be coming from auto ancillary units. The steel may be coming from the, the sheets and all may be coming from the iron and steel companies, and all the things that you see inside, the interiors of the car, they are all manufactured by auto ancillaries. Now that is where, similarly, the next industry that I can tell is like, leather industry. So Bata, it doesn't have a manufacturing facility on its own. It's all, outsourced or subcontracting, and subject to passing the quality test, Bata puts its logo and sells it, and it applies to almost every other leather manufacturing company. Now, why I mentioned these two industries is that BRSR also will be applicable to the value chain partners. So whether it is the upstream, which are basically the suppliers of inputs or the materials to the listed entity, or the downstream, which are basically the consumers. So they are also required. But as of now, as I told you, from December 2024, disclosure of BRSR core for the value chain, it is on voluntary basis. But in the best interest of, corporate governance, we expect that many companies will continue to do that one. And even that BRSR core for the value chain also is subject to assessment or assurance that is applicable to the listed entity. Now, if I have 2 minutes or 3 minutes, what is the global disclosure regime? I would like to share from the report of the OECD, Organization for Economic Cooperation and Development. So this is a 2024 report called Global Corporate Sustainability Report. So this data is up to 2022 or 2023. So the total listed companies across the world, it was 43,970. So out of that 43,970 listed companies, with a total market capitalization of 98 trillion US dollars. So we were talking about Vikasit Bharat, but our today's GDP is approximately about $4 trillion. But these 44,000 odd companies, they had a total market capitalization of 98 trillion US dollars. So it includes the Indian companies as well as the India's market capitalization also. Now the companies that disclosed sustainability related information, it was numbering 9,600, and those companies, they accounted for 86% of the total global stock market capitalization. So that is what actually, I would like to put for your attention in the first place. The second thing is that 6,308 companies representing 77% of the stock market capitalization disclosed Scope 1 and Scope 2 emissions in 2022. And only companies representing 60% of the market capitalization, they disclosed the Scope 3 emissions in 2022. An external service provider assures the sustainability disclosure of almost 66% of the companies that have disclosed sustainability related information by market capitalization. And among the companies that disclose the name of the independent assurance provider, 82% of the sustainability reports were assured by an auditor and the rest by other assurance providers. And the last point that I have for you is that among the 2,957 sustainability reports subject to an independent assurance, 1,668, that is 56% of the total, they were partially or fully verified under limited assurance, while 405, 14% were partially or fully verified under reasonable assurance. So this is what actually, the conditions that have been put in place in India in the form of the BRSR report. I have put before you the global scenario. And thank you very much for inviting me, and thank you for giving me a patient hearing.
Good afternoon. Once again, dignitaries on the dais and off the dais. We are extremely sorry and I am apologizing for stopping you for the lunch. I hope that today's that recipe of that IND-AS and BRSR and ESG, hopes I think your hunger of knowledge has been satisfied. So I thanks on behalf of the Institute of Cash Funds of India, CMA SK Gupta, Anuradha Davelkar in on absentia, then Pramod Jain sir, CMA, Ramshankar Misra, and Venkateshwar Ramakrishnan. I thanks each one of you here present on today's last session. Since from last 2 days, you are the supporters and you are the motivator of all of us. I think I think I can take three takeaway from today's session on the speakers. That Pramod Jain sir said that objective of business is creating a value through the profit. Then I think our own Ramshankar Misra said that vision to value. Then his mantra of MRPL, where he is the working, sky is the limit. And he also said that all CMAs should embrace sky is the limit. So I think all the 2 days our theme was the corporate excellence CMA vision. In the abode of Lord Jagannath, I hope that we have found our vision, our CMA vision. So what we need to do, what is our Divya Drushti of CMA? Create a value for yourselves, create a value for your family, create a value for where you are working, create a value for the organization where you are providing the consultancy, create a value for the mother institute. If it happens, hopes that our CMA will be visible in every corner of the society, India. And thanks each one of you for presenting here. Thank you very much.